Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the trade setup, sectoral trends, all the stocks that'll be in focus today. And of course, we'll also be getting your queries answered by our experts. But before we get him on board, let's take a look at what the headlines are looking like this morning. Well, it was another down day for Wall Street, with stocks closing lower in a volatile session as concerns over monetary policy moves outweigh earnings optimism. Stocks in Asia Pacific also opened largely lower, while the SGX Nifty is indicating a negative start for the Indian market. The MSCI will implement free float and market capitalization changes in Adani Group stocks with effect from the 1st of March this year. MSCI responds to Network 18 saying that Adani Enterprises, Adani Total, Adani Transmission and ACC are likely to see reduction in weightage. Stocks in the spotlight today. LIC reports multifold jump in quarterly profit. Zomato's quarterly loss widens but revenues jump. And Varun Beverages promoters are also likely to sell 850 crore rupees worth of shares via block deal. Well, we're now joined by Kunal Shah of LKP Securities. Good morning, Kunal. Good to have you on the show. Well, if you look at the market setup, the SGX Nifty is hinting at a negative start, but we did manage to end near the day's high in yesterday's session. In fact, the Nifty also regained that 17,900 mark for a very brief period. Do you expect the markets to, continue with the uptrend, or do you expect the global weakness in global cues to weigh on the market sentiment today?
Good morning, everyone. I think firstly, to start with the markets, we have seen a very volatile session since the last at least 4 to 5 trading sessions, where market had started with the 2023 year with a good sell-off, where if I look at the FI data from the 2023, I think they have been a continuous net seller in the market. So this is one data which has been dampening the Indian markets. We are trading in a lower trend, where we have lower high, lower low formations which are intact. Now, since the last 3 to 4 days, we have been trying to reclaim on the higher end, but we are not able to surpass the level of 18,000. Particularly if I talk about Nifty, 17,700, 17,600 is a very good support zone. As long as we trade above those levels, we might see a buy on dip approach at the current levels. For Nifty to continue its uptrend on the upside, 18,000 has to be surpassed. Now, this is also on the weekly expiry as well as on the monthly expiry. If you look at the option data as well, 18,000 is the call strike price where the highest open interest is built up. So there are call writers which are heavily selling at 18,000. So once this 18,000 is taken out, then we might move towards 18,200. Today, we are going to have a gap down opening. I think gap down opening should be utilized again to buy. 17,700 should act as a stop loss for anyone who is holding on to the long positions. I'm expecting over the day a gradual recovery towards 17,850, 17,900 levels again on the upside. And if we close today above 18,000, then the next week would be where we will see the actual rally on the upside. Similarly, if I talk about the Bank Nifty index, where that main volatility has been there, and there has been a massive correction as well in the Bank Nifty index, 42,000 continues to be a strong hurdle for the Bank Nifty index. We have not been able to surpass that level on a closing basis. If I compare it with Nifty, Nifty is much more stronger compared to the Bank Nifty index right now. Yesterday on technicals, we form a hammer candlestick pattern, but a follow-up move is required. So as long as we stay below that 42,000 level, Bank Nifty will continue to remain under pressure. The immediate support for Bank Nifty on the downside is 41,000. Once that is breached, we might see aggressive selling coming off. So I think today's trading day will be very, very important. Where we close today, that will actually give a clear-cut trend for the next week, what the market is likely to do.
Hold that thought, Kunal. We'll be coming back to you and discussing specific stocks with you. But let me also get in Mayuresh Joshi from William O'Neill India to discuss the weight reduction on MSCI, the news that has come in this morning. Good morning, Mayuresh. Good to have you on the show. Now, the MSCI will reduce weightage on 4, some Adani Group companies, Adani Total Gas, Adani Enterprises, Adani Transmission, as well as ACC. This comes as a big sentiment dampener for Adani Group stocks.
Morning, Nandita. Oh, absolutely. I think a large expectation was getting built up a couple of days before this announcement has come through. And the 4 companies that are affected, Adani Enterprises, Transmission, Adani Total Gas, and ACC, will see outflows coming through because of the MSCI changes. So yes, I think that is definitely going to act as a sentiment now.
Right. The Adani Group has already prepaid some of its debt. In fact, they are planning to repay more of that in the next fiscal. There has been some reduction on the capex plans as well going forward, but there's still a mountain of debt to service. Do you think these measures by the group will help in allaying some of the investor concerns going forward?
So I think these measures have been put in place to probably just do that, Nandita, and to a large extent, the kind of price damage that we saw in the actionables taken by the group in prepaying some of its loans, prepaying its pledges as well. I think that probably acts as a sentimental booster to investors, indicating that the cash flows in the asset running businesses of the companies are running strong, and they're in a position to probably do that earlier than what is probably expected. The question marks are still being raised in terms of how these payments were done, so on and so forth. And therefore, there is too much of news flow surrounding the entire group at this point of time.
Right. Mayuresh, what is the outlook on some of these Adani stocks now post the kind of correction that we've seen? Are the valuations turning attractive, especially for Adani ports?
So to a certain extent, yes. And even on the cement assets, if you probably stack up ACC compared to the rest of the pack at this point of time, both in terms of enterprise value as well as the reported numbers, I think valuations probably look attractive for both these stories within the pack itself. Again, a lot of clarification has come through in terms of ACC on how they've probably utilized their cash for the better part of the last calendar year, as well as expectations from ports in terms of reduction of debt and expectations of reducing capex, as you rightly pointed out, to probably ensure that bottom line growth remains strong. So it seems to be the case that these two companies within the group are looking attractive in terms of a valuation matrix. But I think the news flow, Nandita, is very, very strong for the group itself. So I think we'll better watch out on what developments take place.
Right, we'll be watching out for the developments. But would you advise investors to go ahead and buy into these counters on dips, or would it be prudent to adopt a wait and watch approach now?
So I think the best strategy is to probably wait and watch. Look at the volatility that all these stocks are exhibiting at this point of time. We've seen a huge amount of short covering from lower levels in the past few days. But in my opinion, again, I think the kind of news flow that is coming through thick and fast, I think it's always better to probably just wait it out. Let it settle down. Let's have some amount of surety that whatever is happening is probably behind us. It might take a few days, a few weeks, but that's always a prudent and a sane approach to probably follow.
Right, Mayuresh, when it comes to the cement assets, do you think this will impact the expansion plans for Ambuja Cements?
They've still announced that they are probably looking at expansion with a 10,000 crore odd capex going forward in a very, very calibrated manner. But the initial expectations that they might add 40 to 50 million tons to counter how Ultratech is expanding its assets, I think that might take a little bit of a backburner at this point of time, a little bit of a backseat to put it. And therefore, I think it might get delayed in terms of the expansive expansionary plans that they probably had, at least for a quarter or two. So yeah, I think it might be some element of a delayed capital expenditure coming on the cement assets. But let's see how that goes in the next one.
Right. Lastly, Mayuresh, would you have any targets on any of these Adani Group stocks for our viewers?
Not really, Nandita. So I think it's very, very volatile. So it's very difficult to peg a target in terms of the news flow that is surrounding these.
Sure, Mayuresh. Fair enough. Thanks a lot for taking out time and putting things into perspective for us this morning.
Thank you.
Well, let's get back to Kunal then and talk about specific stocks. Kunal, talking about LIC, it saw a multifold jump in its profit for the third quarter. Given the fact that there are a little bit of concerns about its exposure to Adani Group stocks as well, what are the kind of levels you would be watching out for LIC on the charts?
Specifically, if I talk about LIC, post the listing, the stock witnessed a massive correction from almost 850, 900 levels. The stock has corrected to 600. Now, somewhere on the lower end, the stock is trying to find a support around 585, 590 zone. So as long as these levels are held on the downside, we might expect a pullback rally. The overall structure still remains bearish, but if anybody wants to play a pullback rally, then probably we could head towards 650, 660 on the upside. So from the current levels, the view remains positive. 590 should act as a very strong base. I'm expecting a pullback rally towards 650, 660 on the upside.
Right, so those are the levels to watch out for on LIC. Let's talk about Zomato. The stock has been fairly active over the last 5 days or so. It has amassed gains to the tune of 12% or thereabouts. Q3 losses have widened, but even revenues have seen a steady jump. Would you advise investors to go ahead and buy into this counter, given the fact that the company is well on its way to the path of profitability?
See, if I talk about the new age technologies, since the last at least 3 to 4 days, we are seeing a lot of interest in this stocks. Generally, when these stocks were posted, they were at high valuations. Now they have corrected a lot, whether it's a Paytm or whether it's a Zomato. We have seen a road to recovery in Paytm. That is where we saw some rally on the stock. Now it's time for Zomato. Now, if I look at on a pure on technical perspective, the stock witnessed some kind of rally since the last 1 to 2 days. But my setup is still not very clear at the current levels. I am not expecting a huge upside in Zomato from the current levels. But yes, I can expect at least a rally towards the 60, 61 levels from the current zone. So currently it's trading around 54, so probably a more 8 to 10% upside move what you can get from the current levels, a pure trading bet at the current levels which one could take. The lower end support is at 50. So as long as 50 is held on the downside, you can expect a gradual recovery towards 58, 60 levels on the upside. Post that, the stock might spend a lot of time in this zone, and then probably after a month or so, we could form a view that whether the stock is ready for further up move on the upside or it will again slide down.
We'll watch out for levels of 50 on Zomato. Let's also talk about Varun Beverages. Promoters are likely to sell some stock worth around 850 crore rupees via a block deal today. Shares have gained quite a bit this week. If you see 13% up on the charts, would you advise investors to buy into this one at current levels?
See, I think today what they have been selling at 5 to 7% discount, so already the stock will be opening lower. Now on the lower end, 1100 is a strong support for the stock. Whenever it has touched 1100, we have seen a pullback. So even if anybody wants to buy it on this discount, what the promoter selling is happening, I think one should keep a stop loss of 1100 on the downside. If that is breached on a closing basis, then one should exit their position as well. So yes, I think a good risk to reward ratio you will get from the current levels with the cap down what you will be getting. So I think one could definitely initiate long position.
Well, one could initiate long positions on Varun Beverages. I also want to talk about Lupin. It has reported a downbeat set of numbers. Profits have slumped somewhere around 70% in the third quarter. What are your thoughts on some of these pharma companies after their earnings, Kunal? Lupin, Sun Pharma, Dr. Reddy's, which one would you advise investors to look at this juncture?
See, I think pharma as a sector has been a massive underperformer. We have not seen any meaningful rally in the entire pharma space apart from one or two names like Sun Pharma, where we saw a good rally in the recent times. Now, for me, if I talk about the entire pharma space, the pharma space is undergoing a lot of changes. It might take a lot of time for the entire pharma pack to perform. But looking on a chart perspective, if I have to pick out one particular stock from the pharma space at the current levels, then that stock would be Lupin. Because in the last 10 to 12 days, we have seen some good sideways consolidation, and post that consolidation, we have started to see an up move. So for stock on the higher end, 780, 800 has been a typical resistance zone. Even if I look at the option chain data, 800 call is the strike price where good amount of call writing is also happening. So for me, the stock should surpass this level on a closing basis. Then we might see a good short covering in the stock because the stock has witnessed a lot of shorts built up in the past. So that will trigger the short covering and the stock might head towards 840, 850 levels on the upside. So Lupin looks attractive on the chart, but I'll wait for that 800 level to get surpassed. Once that is taken out, then we might see a good short covering rally of at least 6 to 8% on the upside.
We'll expect a short covering rally on Lupin above levels of 800 rupees. Let's also get in some of our viewer queries addressed, and quite a few of them trickling in this morning. The first one comes in from Trilok, and he wants to know your views on Infosys and TCS for the short and long term. Now, IT stocks were quite a bit of an underperformer when it comes to all the other sectors, but they have staged quite a stellar comeback. And given the fact that the commentary from some of these tech giants were quite upbeat in a weakish global environment, what are your views on some of these large cap IT stocks like Infosys and TCS?
See, firstly, particularly if I talk about the IT sector, IT sector in the year 2022 was a massive underperformance. We witnessed a large correction, and post that, since the last 1 to 2 months, the index has been trying to form a base at the lower levels. Now, IT has witnessed some sharp recovery relating to the US concern. Now, a lot of people were expecting that we are about at a peak interest rate hike. We would be getting a terminal rate at the current levels, but there is no clear-cut picture from what the latest Fed policy which was there. So still there are concerns in the US market whether this inflation rate will stop here. There is no clarity from the Fed as well. So from the current levels, since IT has started to underperform and we are seeing some meaningful rally, this is because just of the valuations. IT was overvalued, the valuations have now corrected, and that is where a lot of interest has been coming. And whenever the market turns volatile, it's the IT and the pharma space which act as a defensive bet. If I talk about large cap ITs, I find TCS to be very, very attractive at the current levels. From the current levels, I can still expect at least 6 to 8% rally on the upside. And even if you get any dip in TCS, I think that should be utilized to buy the stock as well. So if I talk particularly on the large cap space, then TCS would be my top.
I hope this answers your query, Trilok. TCS is what Kunal prefers at the current juncture. Moving on to the next query, this is coming in from Parth Chaudhary, and he wants to know your views on Tata Power. If you look at the stock, it has shed somewhere around 10% on a 6-month basis. And looking at what it has done this week, it's just about down somewhere around 0.5% or thereabouts. What is the road ahead looking like for Tata Power on the charts, Kunal?
See, Tata Power has been one of the stocks which had seen a phenomenal rally from almost 50 levels to the levels of 250 to 300 on the upside. Now, post that rally, the stock witnessed a sharp correction from 300. Almost the stock is down to 200. Now, from the current levels, the stock is trying to find a support around that 190-200 zone. And whenever that selling pressure comes, it has not been able to breach that support zone, which is a bit of positive for the stock. But the chart on the overall perspective still doesn't look very much attractive. It might eventually happen that we might break the support and even go lower. So my view on the stock at the current levels would be to avoid. I will be bullish on the stock only above the level of 220. So if 220 is taken out, that is where the actual downtrend or the worst for Tata Power will get over. And then we might see a swift rally towards 260, 280 levels on the upside. So I think it's in a wait and watch situation. If 220 is crossed, that would be an ideal level to initiate long positions.
Right. At the current levels, it's an avoid when it comes to Tata Power. The next query is coming in on Mahindra Cie. Now, the shares were under quite a bit of pressure yesterday. They lost somewhere around 5% or thereabouts. Sri Kumar Menon has written in and he wants to know your views on this counter, Kunal.
So if I talk about Mahindra Cie, the stock had in the past 1 month given a very strong breakout on the technical charts. 325, 330 was a zone from where the breakout had actually occurred. And post that, the stock has been trading in an uptrend with higher high, higher low formations, which are intact here. Now, since the stock has rallied from 320 to the level of 450, we are just seeing a mean reversion over here. I am expecting even if this correction comes, it could come towards the levels of 350, 360 max on the downside. So I think whatever dip you are getting in Mahindra Cie, utilize that as an opportunity to buy. 347, 350 should act as your stop loss on a closing basis. If that is breached, then we might see further correction coming in. But if the stock is currently trading at 390, if it comes at 380, 370 zone, that would be an ideal opportunity to buy the stock. 350 should be your stop loss. I'm expecting eventually the stock to go towards the levels of 460 to 500 on the upside. The chart setup looks very attractive. The momentum indicators are also in the strong buying zone. And I think this dip, if you get, should be an opportunity to add on to your portfolios.
Well, use any dips to buy into this counter. The next query is coming in on Bank of Baroda. Ismail Mohammed has written in and he wants to know your views on this counter. Well, this morning there's a bit of news that MSCI has included Bank of Baroda in its global standard index. When you look at the charts, do you expect more upside on this counter going forward?
Yes, definitely. If I look on the charts, specifically first, if I talk about the PSU bank space, the PSU bank space still looks very attractive from the current level, whether it's an SBI, whether it's an Can Bank, or whether it's a Bank of Baroda. Specifically, if I talk about a Bank of Baroda, the stock had witnessed again a very good rally from almost 100 levels to 200. It had doubled in the past 5 to 6 months. And post that, the stock has witnessed a correction towards the levels of 150. And now this 150 has become a strong base for the stock. As long as 150 is not breached on the downside, I am expecting the stock to continue the rally on the upside. The upside levels, what I see on technicals are 180 on an immediate basis, and the next level is 192. So I think from the current levels also one can add Bank of Baroda. If you get any dips, you can add again. 150 has now been a strong bottom or a base for the stock. Gradually, the stock will move higher towards the mentioned targets of 180 to 192 levels on the upside.
Right, those are the levels to watch out for on Bank of Baroda. The next query is coming in on stock from the defense pack, HAL. Alex has written in and he wants to know your long-term views on the counter. Now, last year we did see a stellar run in some of these defense names, but after that they did come under a bout of correction. Do you expect the correction to continue, or is it time to look at buying into these stocks on dips?
So if I talk about the defense space, I don't expect a major correction into the entire defense space. Probably they would enter into a long consolidation phase. That could be one picture that could play out. But I think in this consolidation phase, the ideal opportunity would be to keep on adding on dips. So it could be acting as an SIP stock for you, where whatever dips you get, you should keep on adding it on every at least 3 to 5% correction what you get into the stock. So at the current levels, the stock looks very attractive. One should definitely start adding it. The lower end support is at 2250. So as long as 2250 is not breached, I am expecting the stock to remain stable. Gradually, the stock will move towards 2600 and post that 2800 levels on the upside. So I think a good risk to reward ratio you are getting from the current levels. Keep on buying it on every corrections as well. Keep it as a portfolio stock. I think the stock would do very well even in the near term as well.
Well, HL expected to do very well in the near term as well. The next query is coming in from Somendra Sarkar, and he wants to know your short-term and long-term view on AngelOne. Now, if you see, the stock has been in a steady downtrend at least this week. Does it warrant a buy now?
See, if we had seen the broking stocks, which did quite well in the COVID era. Now, post that COVID era, the stock has now witnessed a sharp correction, and I think this correction is not about to end. The stock on the daily chart has formed a head and shoulder pattern, which is a bearish pattern, and yesterday the stock has given a breakdown on its neckline. So I'm expecting further correction in the stock on the downward trend, at least towards the levels of 1000 to 900. So I think the rally which happened in the stock or the valuation which it went to was extremely high. Now it's best time that one should stay away from the stock and don't try to look for buying opportunities at the current levels or bottom fishing here. I think still a correction is left. 1000 or 900 levels could come on the downside. So from the current levels, my view remains bearish on AngelOne.
Well, the view remains bearish on AngelOne. The next query is coming in on Page Industries. Raj has written in and he wants to know your views on this. Now, this stock has been in a downtrend over the last 5 days and even over the last 1 month, and it's quite close to its 52-week lows. Would you suggest investors to buy into this counter given the fact that it is available at lower prices now, or is it best to stay away from it right now?
I think definitely it is best to stay away from it right now. The stock has been witnessing a lower high, lower low formations. The stock has already breached its support of 40,000 in yesterday's trading session. So once 40,000 is breached, I'm expecting the stock again to correct further towards the levels of at least 34,000 to 32,000 on the downside. So still a lot of correction is left in the stock. Kindly avoid taking long positions. If anybody has it in their portfolio, I think it's ideal opportunity to book some profit as well and shift your money to some other counters.
Right, avoid page industries at current levels. That's the call. The next query is coming in on Tata Motors. Jagdish has written in and he wants to know your views on this one. Given the fact that there is some visibility on the chip crisis and globally also, I think there has been a pickup in demand. Over the last 5 days, we have seen this counter losing somewhere around 2 to 3%. Do you think this warrants a buy for the long term now?
See, if I look at the chart of Tata Motors, since the last at least 3 to 4 months, the stock has been trying to breach the support of 380. But whenever it comes at 380, we again see a spot of buying. So definitely there is buying interest at the lower levels. I can expect the stock gradually to move higher as well. Any dip you get into the stock, that should be an opportunity to again buy. As long as 380 is not breached on the downside, I don't expect any significant correction in the stock. So from the current levels, one could definitely add it to your portfolio. If you get any dips, you should add it. 380 should be a stop loss on the downside. I can expect the stock to go towards the levels of 500, 520 on the upside in the at least next 2 to 3 months.
Right, so those are the levels to watch out for on Tata Motors. Well, this wraps up our query segment for today. But before I let you go, Kunal, leave us with some stock recommendations for our viewers.
So as we say that we are going to open gap down in today's trading session, the market is likely to be quite volatile even in the coming sessions as well. It will be a very stock specific and sector specific approach. We will be heading towards elections next year, so definitely the stock market for 2023 is going to be extremely volatile. So I think there will be very selective pockets and selective sectors which will do well. And out of that, one sector which I am bullish on is the power space. I think power stocks could do quite well for the year 2023. And on the power space, my top pick would be PFC, that is Power Finance Company. The stock, on whether it's on the daily or whether it's on the weekly chart, has formed a strong base formation at the lower levels. We had seen a very good rally in the stock from 120 toward the levels of 160, 180 on the upside. And now the stock has witnessed some correction because of the global volatility. I am expecting the stock to gradually move higher. 130 is a very strong base for the stock right now. So one can add it at the current levels. 130 should be a stop loss. I'm expecting targets of 160 to 180 on the upside on a positional basis. So PFC is one stock which is looking very good to me on the power space. The second stock for me would be on the sell side, and the name of the stock will be Hero Moto. Now, Hero Moto on the technical chart has given a breakdown, and post the breakdown, we have also seen in yesterday's trading session a good amount of short positions which have been created on the FNO space. So I think fresh short positions have been created. The stock has broken down from a rising trend line as well. I'm expecting the stock to go towards the levels of 2450 to 2400 on the downside. So from current levels, one can sell Hero Motor. The stop loss on the upside would be 2700. First target on the downside will be 2400 and the second target would be 2370 on the downside.
So buy call on PFC and a sell call on Hero Moto. Those are the stock recommendations from Kunal this morning. With that, Kunal, thanks a lot for taking out time and sharing your thoughts with us this morning. Well, for viewers, this is a wrap on this edition of Morning Trade. But coming up next is Opening Bell, so don't go anywhere.